Hi, investors and precious metal enthusiasts. It's the Canadian Options Trader, and this video is about how to buy or get long precious metals. Here I have 1 ounce of gold, and here I have 1 ounce of silver, and these are both maples. This is a gold maple, and this is a silver maple. I'm going to start by looking at the gold-silver ratio. So this chart shows the gold-silver ratio for all years, but I'm going to focus on just the last 5 years. So you can see the gold-silver ratio hit a peak on this chart at around April 2020. So the ratio was 114. So that means it took 114 ounces of silver to equal 1 ounce of gold. And then that ratio went way down to a low of around 65 in February 2021. And right now it's back up to around 79. So it's still near the lower end of its range when you consider the last 5 years. I can also look at the gold to silver ratio in my charting platform here, and I'm using gold futures and silver futures to make this chart. So you can see that this chart also peaked around April 2020, and it hit a low around February or March 2021. So up here around the peak might have been a good time to buy silver and sell gold. And down here around this valley might have been a good time to buy gold and sell silver. So right now, depending on your preferences, you could decide if you want to get long gold or long silver or both. Now, I already did an extensive video on silver, so I'll put a link to that video in the show notes. And this video will focus exclusively on gold and gold products, which is something I didn't cover in the silver video. Also, I'm going to show a really cool demonstration on how to use a free backtester to backtest various investment strategies. Okay, so here's a list of the 5 main products that I would consider using to get long gold. Gold futures, the GLD ETF, the gold miners, which are GDX and GDXJ, the small precious metals contract, or physical gold, also called bullion. So which strategies would I use to get long these products? Well, I did another video on 4 bullish trading strategies, and these are the 4 main ones that I like using: the short put, the Jade Lizard, the short put spread, and the covered call. Okay, here I am in my trading platform, and I've got a chart up of the gold futures contract. Gold is currently trading at $1,900 an ounce. And just to show you the size of this contract, this is 100 ounces of gold. So 100 of these. This is an enormous contract. The notional value of this contract is $190,000. But my brokerage is only asking me to put up about $11,000 to trade that. So I would not recommend this for any retail traders. This is just too big of a product. But you can use the GC options. So if I wanted to get long gold futures, for example, I could just sell a put spread. So if I look at the delta here, I could sell around the 30 delta put, and I could go, say, 20 points wide and buy a put. So if I put in the mid price here, let's say around 6 points, my brokerage is only asking me to put up $1,000 in buying power here. That would give me a credit of $600, $5 commission. So my max return here would be $600, max loss around $1,400, and a probability of profit of 69%. So I did do a video where I talk about spreads using futures options and all the multipliers. So check out that video if you haven't seen that yet. I'll put that in the show notes as well. But let's move on to the equity products such as GLD. So GLD is the gold ETF. It's trading at 177 right now. So the notional value of that for 100 shares would be $17,000. And my brokerage is asking me to put up only $5,300 to buy 100 shares of GLD and only about $1 commission. But the nice thing about GLD is I can also use options. So again, if I just wanted to get long GLD, I could sell, for example, a 30 delta put. So using the Tasty Trade mechanics, so the closest expiration to 45 days is actually 55 days in April. So if I sell roughly the 30 delta put here, that would be the 173 put. And the buying power usage here is 5,100. So it's not that different than buying 100 shares. That's in Canada only. It's different in other countries. But the difference here is this is strategic. So my probability of profit here is 73%. My max return is just the credit I receive. And the max loss is if gold goes to 0 in the next 55 days, which I don't think anyone needs to worry about that. The other thing I could do is I could buy a put further down the options chain, let's say 10 points wide. So I'll buy the 163 put. That's around the 8 or 9 delta. So I'm selling a 30 delta, buying an 8 or 9 delta. The buying power I have to put up here is only $1,000 because that's my max loss. And if I look at my margin performance, my probability of profit here is reduced a little bit to 72%. But this is a defined risk strategy. So the trade-off is I'm reducing my max loss drops to only around $800. So now let's pop into my backtester to see how this strategy performed over time. So this backtester is called Lookback. It's completely free for anyone to use. Just go to lookback.tastytrade.com and you can enter your own strategies and come up with your own ideas for investments or trades that you want to make. So here I've selected GLD as my underlying, and I'm going to add a leg here. I'm going to sell, so -1, a put at the 30 delta, and using the Tasty Trade mechanics, I'm going to go 45 days to expiration. So selling a put, let's run the back test. This is what would have happened over time. Got an 81% win rate. From 2008 up until present day, I would have made almost $10,000. And that's using roughly $5,000 in buying power, as I just showed. So this is a pretty reasonable strategy. The only problem here is there were periods of time where there were these big drawdowns. So in 2013, there was a big drawdown. There was another one in 2016 and a smaller one in 2018 and so on. So let's go back and see if defining my risk would have helped at all with that. So I'm going to add another leg here. I'm still selling the 30 delta put, but now I'm going to buy, so +1, another put, and let's go around the 8 delta, just like I showed in my trading platform. So 45 days to expiration as well. Hit OK, and now I'm going to run that back test. So you can see the win rate here is 80%, which is still really good, but I didn't make nearly as much money. I had only made about $5,000 over the same time period. So you can see the big difference between defining your risk and going naked with undefined risk. This is the trade-off you make. Over time, defining your risk actually doesn't help. It might help temporarily during some of these drawdowns. It might reduce some of those drawdowns, but overall, you don't make as much money. So it's just a trade-off that you have to decide whether you want to define your risk or go naked. So another strategy that I could backtest here as one of my 4 bullish strategies is the Jade Lizard. So let's get rid of the long put. I'll keep the naked put on, but now I'm going to add in a short call spread. So I'm going to sell 1 call, and let's also do that at the 30 delta, also 45 days to expiration. But now I'm going to buy a call further out of the money to make a Jade Lizard. Let's do that when at, say, the 8 delta as well, also 45 days. And let's run that back test. So the win rate is only 69% here, but it made more money than those other 2 strategies. So this shows you that it's actually more optimal to sell the call side. Even if you're bullish, selling the call side can help you over time to make more money, and it's also reduced some of these drawdowns. So this is why personally, I would rather do a Jade Lizard than selling a naked put or selling a put spread, especially on a larger product like this where you can actually get a substantial credit from a call spread. So as my Jade Lizard example here, let's sell the 173 put and we'll sell the 184 call and go out to around the 8 delta or so and buy the call. So I'm still putting up the same buying power there as a naked put, but now I'm collecting an extra $1.50 or so from the call spread. So if I do that over and over every month, every expiration cycle, that will help me over time. Okay, so the next product that I wanted to look at was one of the gold miners. So there's GDX, which is just the regular gold miners, and then there's GDXJ, which is the junior gold miners. The 2 charts look almost identical. They just have different prices. They're quite small in notional value compared to GLDs. GDX is trading for only $34. So I would have no problem at all just selling a naked put in GDX. So if I was to sell, say, a 30-ish delta put, sell the 32 put, I'm only putting up $875 there. And back in the back tester here for GDX now, if I sell a 30 delta put, 45 days to expiration, and do that every cycle over the course of a decade or so, I would get a 76% win rate, and it would make about $1,000 over that period. So it's not a lot, but you're putting up a lot less money than to trade GLD. So there's still these big drawdowns, so you do have to deal with that. If you want to be bullish this product, at the end of the day, you need it to go up to make money. Okay, so now let's look at the small precious metals contract, which is a small exchange product. You might have noticed I'm wearing my small exchange shirt today, and SPRE or SPRE is the small precious metals contract. In Interactive Brokers, they have a different symbol. It's PRESME. So this is a futures contract just like GC, but it's a very small notional value. So if I was to buy one contract of SPRE trading around $75, it's around $7,500 notional product. I only pay 29 cents commission to trade it. And it's really easy to use these small products because the multiplier is just 1, just like buying 100 shares of stock. So if SPRE goes up by $1, I would make $100 $100. So the margining is very low on this, but usually it's around $500 to $1,000 margin to trade a $7,500 notional product. So there's some leverage involved there. And that's one way to get really nice bang for your buck, just to get long a small futures contract. Now, SPRE does have options. They just introduced options on some of the small products, but unfortunately, Interactive Brokers has not added it yet. So we can't trade them here in Canada yet. If you're in the US, of course, you can trade the options on SPRE. And that's another really good way to get strategic with getting long precious metals. So here are the specifications for SPRE. 1 penny is $1. The small exchange is only charging $500 in buying power, but it could be different depending on your brokerage. IB doesn't really have great margining compared to other brokerages. So of course, we would use Tastyworks if possible, as soon as they come to Canada. And they do have options here. Now, what is the SPRE contract? Well, it's made up of mostly gold, some silver, and some platinum. And the last time they updated their document, it was 69% gold, 24% silver, and 6% platinum. So this could be a really good way to get long precious metals and have a bit of diversification here. So you're getting long gold, silver, and platinum at the same time. Okay, so the last way that I would consider using to get long gold is to get long physical gold or bullion, just like this 1 ounce coin. Although I have done this in the past, I'm not crazy about doing this anymore. And I mentioned some of the reasons for that in the silver video. And it's mainly because the markups and commissions on buying physical precious metals are so enormous. As you saw, all the other options I showed you today have very tiny commissions. You can pay like a 10 or 20% markup on some of these. So although I have bought this in the past, I wouldn't consider doing it in the future. There's so many other better ways to get long gold and precious metals without having to resort to physical. But if you're set on that, just check out my silver video. I have some options for that as well. Okay, so that's my video on getting long precious metals. Let me know what you think. It seems like we're entering an environment where precious metals could really take off, and there could be a lot of interest in the investing and trading community. So let me know what you think. How do you like to invest in precious metals? Do you prefer gold or do you prefer silver? Let me know in the comments, and thanks for watching.